Hello everybody, thanks for tuning in to another video and happy Movember. I'm gonna have a mustache for probably the next couple of videos, so hopefully it's not too distracting. This week's video is going to be on the benchmark price and HPI numbers for October of 2023 across our three major markets, Northumberland, Hastings, Prince Edward, and Kingston and area. So as you know, if you've watched my videos before, the benchmark price numbers come out a little bit lagging the median sale price, the normal monthly market updates I give. So these come out on the 15th of the month after. So we're looking at the October 2023 benchmark price and HPI numbers for these three markets. Let's get into it. First, we'll start with benchmark price, then we'll jump over to HPI. As you may know, these percentage values will stay the same. It's just gonna be the benchmark price for its HPI value that changes, either to reflect a dollar figure in benchmark price's case, or a value with a base of 100 in HPI's case. So Hastings, Prince Edward County, we're sitting at benchmark price 554,800. That's down 0.8% year over year, meaning October 2022 to October 2023. Up 1.1% year to date, meaning January 2023 to October 2023. Northumberland, 732,700. That's up 4% year over year, up 6.2% year to date. Kingston and area sitting at 543. That's down 4.7% year over year and up 1.8% year to date. And then over to home price index, as I said, percentage value is the same. Hastings, Prince Edward sitting at 347, Northumberland 335.8, and Kingston and area at 264.2. What can we extrapolate from this data? Well, across all three markets, we can see we're up year to date, but with the exception of Northumberland, down year over year. Now, why is this? Well, if you remember, last winter, we saw prices still on the decline from October. So November, December, January, they were all lower benchmark price and HPI numbers than October. So we're comparing year over year. October was still a little bit higher than we are this year. And then when you look at year to date numbers, let's say January is close to the bottom in all three of these markets. We're up from the bottom, but that's not factoring in that decline from last winter. And we're up from the bottom because we had Bank of Canada hold rates in the spring, which brought some consumer confidence back, pushed prices up a little bit before they decided to increase rates again. And this happened just at a more kind of volatile scale in the Toronto market. Like they had a big jump in the spring, not as much as us, and now they're having 4 straight months of decline. And all three markets here that I'm looking at are actually down month over month. So if you look back at the September HPI benchmark price videos, all these numbers are down from then. Benchmark price is down year over year in Kingston, Hastings, and Prince Edward. So what does this mean? Well, they're not down that much, so I wouldn't say this is a cause for panic, but I thought it would be helpful to take a little bit of a zoom out approach on this and look at a 10-year time horizon from prices in October of 2013 to this point in time. So if we look at Hastings, Prince Edward, the benchmark price was about 200,000, 202,700, and we're up 93% over a 10-year span of that price. Northumberland, same kind of deal, 264,700, that's up 94% over 10 years. Kingston and area, that's 264, up a mere 69% over 10 years. So you get a 7% increase on something that you're living in, paying down the principal when you could be paying rent. I think that's a pretty good deal. But on the other side, if we look at the decrease from the peak, which decrease from the peak of all three of these markets until this point in time now, Hastings, Prince Edward, it was sitting at about 680,000. That's down 20% from the peak. Northumberland, we're sitting at 890, down 19%. Kingston area, about 650, that's down 18%. So, real estate, it doesn't go up every year or every 2 years. And you can get caught if you're not willing or able to hold on to these assets long term. And that's kind of the thing with a leveraged asset. I mean, if something's down 20% and you're leveraged 80% on that, it's actually down 100%, right? Because you're leveraged 5 to 1 on this asset. So the moral of the story here is real estate does tend to go up over time, but that time is not determined year over year or month over month or guaranteed to go up over the next 2 years, right? It could take us 5 years, 10 years to recover to these prices, depending on market situations and rates and economic conditions and how much supply is coming to the market and how much immigration. Like, there's so many factors here that we're looking at. So what's the takeaway from this HPI benchmark price data? Well, prices are declining month over month. All three of these markets, their declines from September of 2023. If we're looking at the Toronto market trends, they're down 4 months in a row, month over month. So we may continue to follow these trends if rates stay elevated and we see more inventory come to the market, really dependent on what rates are going to do too. Like, we've really kind of ruled out a lot of first-time home buyers. So we have people who are buying and selling in the same market, but where's that inventory go for people who are just selling? Either it goes to investors, which are not as prevalent in today's market, and first-time home buyers, which, again, hard for them to qualify. So if we're seeing inventory pile up, that's probably the reason. Don't think there's really a cause for concern in these markets, because generally the homes are less leveraged versus somewhere in the GTA, and your option to sell and rent is very different than somewhere in the GTA where the sale price is much higher, discrepancy between your rental price. Like, maybe you have a $800,000 mortgage in Markham, Mississauga, wherever, that's costing you $7,000 a month, and you can go rent for $3,000. Maybe that makes sense to sell that house, versus here, maybe your mortgage is $3,000, you go and sell and you rent something for $2,600 a month. You're pretty incentivized to hold on to that property if you can. Sellers coming to terms with these normal prices. Like, the market's been pretty normal and not volatile for the last 16 months. Prices have been kind of hovering around the same area. So everyone's coming to terms with these prices, and people are realizing that if you didn't buy in 2022 or 2021, you've done really well on this asset that you just bought to live in or you bought to rent out. And you're not going to just cash out on a home. Like, it doesn't really work like that, and it shouldn't work like that. So I think people are coming to terms with that, and people are also coming to terms with, if you're buying and selling in the same market, they're being less focused on price, right? And I'll do another video on that, of how it's really the delta that matters between your sale and purchase if you're buying in the same market or moving in the same market, and not just your sale price is the be all and end all. So those are my thoughts. HPI benchmark price for October 2023. Thank you for watching. Stay tuned next week for a new video. As always, feel free to contact me. All my info is in the description below. Thank you.